morning, everybody. This is Nick with FortuneDNA. I just wanted to come in briefly this morning before I head out to shoot this short video to get out in front of you investors that are out there not knowing what to do in the market and stop you from making some very critical mistakes in regards to your investment portfolio. Typically, what happens is that investors who are in qualified type accounts, IRAs, 401ks, SEPs, they're in stocks or mutual funds. When the economy turns like this in the market, especially in the stock market, they will seek safe haven and seek safe harbor in bonds and into the bond companies that are out there. And I got to tell you, this is a huge no-no. What's different now than has ever taken place before? Typically, you would have a bond company, and let's just say, for the sake of argument, it's a $1 billion bond out there. What would happen is they would take $500 million and they would keep that in cash reserves, and the other $500 million would go out there and it would invest your money out in some of these conservative things out there. And so what would happen is if a bad decision was made or an oversight was missed and somehow the markets caught them off guard, they wouldn't lose all the money in the bond, and they would have that backstop of half the money in the bond to be able to go in there and reinvest that money to get back their lost leaders, to make the investors whole, and to follow up on their fiduciary duty of paying the rate of return that they guaranteed to the investors. Now what's happened that's different than ever before is instead of having these 50% reserves, these big bond companies now have a 4 or 5% reserve. That means they've got 94, 95, 96% of the money invested out there in some of these very risky non-conservative investments, whereas they used to keep half of the money in reserves and the other half used to be invested in very conservative investments. Now, I'm not going to say that I'm the absolute be-all, end-all of what takes place in the markets, but I do listen to some of the richest people that are out there that are heavily vested in these type of various markets out there. One being Carl Icahn, who literally got on MSN Investor Weekly here just a couple days ago and did a scathing interview talking about the fact that, you know, these bond companies are so very far leveraged and the markets are so very overpriced, and the major investor companies out there, your major hedge funds, your major capital mainstay investment vehicle companies out there, your big name companies, have gone and borrowed money from the Federal Reserve because it was so cheap. And they've taken this money that's ultimately a credit card and they've used it to invest into other investments on leverage, and not just other investments, but very risky other investments. So basically, let me explain. This would be like if you got a credit card for billions of dollars, and then you went and took that money and got a cash advance against it and went out and ran out to the crap table in Las Vegas. Okay? The problem is if you don't make your numbers, or if you lose money, not only have you lost the investor's money, but you still owe on the credit card. This is what's taking place in this market. The best thing that you can do as an investor out there is get your money out of the market, get it out of these major brokerages. It used to be in 2008 that you had these major companies that were 10, 12, 15 times leveraged out there. Now you have a fraction of that number of companies that the government has picked as winners that are 400, 500 times that are overpriced, that are investing overpriced in these investments that are over leveraged. Guys, it's important that you take your money, get it to a place where you can self-direct it, where you can control it yourself, and that you get into some fundamentals out there. You know, get into gold or silver, turn it into cash, but get it out of these major brokerages. They're the ones that are going to be without a chair when the music stops. Don't let that happen to you. Be smart about your investing. It's your life, it's your family, it's your retirement dollars. You owe it to yourself to take care of your own money and be a good steward. Take care, guys. I look forward to talking to you in another segment, and we'll see you later. Bye-bye.